we need to look at the IT. IT offers us good earning visibility, uh, and investors they need to position themselves. If a risk appetite investor then can be there in mid and small cap IT space. Small cap IT space is very risky. There is a lot of disruption is happening in this space. Whereas a growth investor can look at the top three IT stocks, which offers a stable growth for their portfolio. And investors also look for investing in certain pharma stocks which are going to take the benefit of advantage of current COVID vaccination drive and
Yeah.
certain APIs. These are the stocks because COVID is going to stay there. We thought couple of months back or few weeks back we thought COVID is over. Nothing. People they were in the sight of in that those kind of mindset. But today the scenario is different. So. The companies which are linked to this COVID activity in pharma sector, they are going to reap a handful. They are going to give uh, good returns when compared to the indices.
You have to be very careful on what kinds of stocks that you buy. You know, if you are buying poor businesses which are very cyclical in nature, where there is not going to be any earnings support over the near term, then you might end up, actually buying the wrong set of stocks and then holding on to them. But if you are able to identify good quality companies in sectors which are likely to do well, then a decent buy on dips kind of strategy is likely to do well over the next 6 months or a year or maybe a longer period of time.
He has given a spectacular rally in the last year, in the last financial year of FY21. But for FY22, although the outlook seems to be constructive, we are expecting a modest growth, a higher single-digit growth in the Nifty. So in this week, we have seen Nifty trying to reclaim its strength in the last couple of trading sessions, but due to profit booking at higher levels, it is not able to resume its upward trend. So 14,300 to 15,100 would be the range where Nifty would consolidate for next couple of sessions before actually starting its rally. The next couple of quarters, more weightage would be on how corporates have been able to use these measures, how they were able to capitalize on them. So much of the portion would rely on the corporate earnings in the next 2 quarters, I would say. So if companies come up with good quarter numbers, then the level of 15,500 for Nifty is really not so far, and maybe we can see it by June end.